Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. Paris rapeseed. Since mid-June until October, the market had been trapped between a congestion band that was below between 438 to 445 and 3/4 and a congestion band that was above between 513 to 519.5. During this incarceration, the market constructed a head and shoulders pattern, looking more and more like a head and shoulders top right now, as well as an extension to its second shoulder from mid-August until the start of October. I've highlighted the neckline for this head and shoulders top in dark blue on my daily chart, currently at 450 and 3/4. The problem the market endured had been the sheer amount of force necessary to push down through this head and shoulders top and try and fulfill targets below. Now, what I mean by this is that we not only have the neckline to try and push down through, but nearby was that previously mentioned congestion band between 438 to 445 and 3/4, which contains the March, April and June 2013 highs of 442 and a quarter, 442 even and 438 even respectively. It looked as if prices had finally managed to break low in early October, but the market turned back up and into the congestion again, with a hammer pattern that led to a gap higher in mid-October. It was only late 2 weeks ago that we saw another concerted attempt lower that ran into the middle of last week before another gapping higher pullback. However, this pullback has been more limited than the previous attempts, seemingly getting stuck in the overhead congestion band of 438 to 445 and 3/4 late last week and again late this week. We have now had multiple closes below the neckline and even below the congestion, though the market is taking its own sweet time in responding to these bearish factors. However, there is another bearish factor that is entering the frame, the mid-July to date downtrend, highlighted in pink on my daily chart, currently at 443.80. Time has run out for this downtrend, or for the market, as it enters the congestion band tomorrow. Thus, one of them will have to give way. As we are still below the neckline and the congestion band, I will reiterate some potential targets below that I laid out last week for such a head and shoulders top pattern. Hence, a primary target X is in the 400 even zone, with a secondary harder to reach target X1 in the 354 even zone. Such a move would be very, very interesting, as we have alternate neckline 1 currently at 401 even and alternate neckline 2 currently 404 even, both from the November 2019 to February 2020 head and shoulders top in the way, and they are highlighted in bright red and green respectively, plus the December 2020 low at 396 and 3/4, all of which together are in the way. And I would note that these three supports stopped the fall of this market back in May this year. Winnipeg canola. The key patterns here have been the July to late September double top, one which I had doubts upon at the time, but which we've seen play out to both primary and secondary targets. Then below that, the mid-April to early July reverse head and shoulders bottom, specifically the neckline highlighted in purple on my daily chart, which is currently at 701.10, which even this week has been influencing the market. And finally, what I consider the most important pattern here, bar perhaps the neckline, and that is the bearish Andrews pitchfork created by the earlier double top of the mid-July to late August move, which is highlighted in bright red on my daily chart. On this last pattern, the market is at the moment once again just above the middle time, currently at 675.80. That's the middle time. Prices have exhibited an affinity for this middle time since mid-September. Okay, so the overall pressure has been bearish with the double top and then the bearish Andrews pitchfork. Looking below the middle time, well, we really don't have that much support until you start looking at the June 2021 high at 655.90. Now, one final point, and it is a messy one. We had last week a dead cross, a lagging bearish indicator of the declining short medium moving average, currently at 748.20, down through the declining long moving average, currently 653.60. This is already a bearish indicator, even as I have already said, a lagging one. However, we additionally could look at last week and maybe the start of this week as being the scene of a possible bow tie formation of moving averages. A possible bearish bow tie formation of the moving averages with the slowly rising medium moving average, currently 756.5, being the last element. There is a lot wrong with this. For example, the moving average is in the wrong order, and one of them is heading higher, though it has now started to level out and may start to decline. However, the early indication of such a pattern would be bearish. Plus, the theory behind this indicates that between 15 to 20 sessions after the crossover, we may see a significant move start. Thus, and I would extend this window a little for the fact to account for the messy nature of this bow tie formation. So between approximately the 17th to the 27th of November, we may see a significant, likely bearish, move. I'll put no more effort into this one, as I've already said, it is a messy one. Bursa Malaysia crude palm oil. The mid-August to early November 2022, that's right, August to November 2022, a year old, mildly bearish shift picture, the one highlighted in dark green on my daily chart, is still running the show here after so many months and now a year old. This mildly bearish pitchfork has guided prices more or less lower, initially in between the upper tine, currently at 40.58, and the middle tine, currently 34.26. Then for a while in May and June between the middle tine and the lower tine, which is currently at 27.94, before prices move back up again in between the middle and upper tines, mainly around the upper tine. The significant recent patterns here have been the June to September diamond pattern, highlighted in dark blue on my daily chart, and the even more recent late July to late August bearish shift picture, highlighted in bright green on my daily chart. The market is testing the upper tine, currently at 37.41, as it has done for most of late October. The upper tine has been reinforced by the rising medium moving average, currently at 37.73. which is moving up and away. But we also have the declining short medium moving average, currently 37.35, as reinforcement and seemingly one that is tracking low of the upper tine. Additional to this is the slowly declining long moving average, currently at 38.06, which is not too far overhead, and 2 weeks ago truly capped the market's rise. Now going back to the diamond pattern type from July to early September, it was indeed early September when we saw prices punch down and out of this diamond pattern type. The primary target for this pattern on the downside was in the 35.79 zone, with harder to reach secondary target X1 down in the 33.75 zone. The primary target was achieved mid-October, but the harder to reach secondary target X1 is still out there and still open. Now there's another potential pattern I'd like to discuss, and that is the potential early September to date reverse head and shoulders pattern. I cannot tell as yet whether this is a genuine reverse head and shoulders, as it has not fully formed. You see, we still have to construct the second shoulder, but I thought it important to bring it to your attention. The neckline is not highlighted on my daily chart because it's not constructed, but today it's currently at 38.43, which is just above the long moving average. Additionally, it is also way too early to say if this will be a traditional reverse head and shoulders, the reversal pattern type, or if it will be the rarer reverse head and shoulders continuation pattern. There is one final point, not a pattern, but a point that I'd like to make, and that is the late July to date downtrend, currently at 37.54, and highlighted in bright red on my daily chart. Time has run out for this, for the market actually, or for the pattern, or for the point, for the trend line. So it's run out either for the market or for the trend line, as the crossover of these happens tomorrow, and one of them will have to give way. I will watch with interest next week which it will be. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.